Recent policy updates in taxation and business compliance introduce several significant changes that businesses, organizations, and individuals must pay close attention to. Understanding these updates is critical to ensuring tax compliance, avoiding administrative penalties, and capitalizing on the new opportunities provided by the changing fiscal landscape. One important revision concerns personal income tax for non-residents. When a company in Vietnam signs a sales brokerage contract with an individual who lives and works in Laos and does not fulfill the criteria of a tax resident set forth in Circular 11/2013 TT-BTC, this individual is classified as a non-resident under the same circular's provisions. Non-resident individuals deriving taxable income from salaries or wages are subject to a flat personal income tax rate of 20%. Therefore, companies must correctly identify tax residency status when issuing contracts to individuals living outside of Vietnam to apply the appropriate tax rate, mitigating risks of miscalculation or underpayment. Furthermore, when contracting with a non-resident individual for brokerage of goods or services exported abroad, and the contract meets the specific conditions outlined in Circular 103/2014 TT-BTC, such brokerage income should not be subject to foreign contractor tax. Recognizing and applying this exception accurately can offer significant tax relief and administrative simplification for involved parties. Turning to value-added tax, major amendments come into effect from July 1, 2025. Several items previously exempt from value-added tax, such as fertilizers, specialized agricultural machinery, and offshore fishing vessels, will no longer be excluded, impacting cost structures in sectors like agriculture and fisheries. Products exported that are processed from exploited natural resources now need to comply with an updated government list to qualify for tax exemptions. Another noteworthy update is the inclusion of goods imported for humanitarian purposes or for disaster relief as non-taxable items, aligning with evolving government responses to socio-economic emergencies. Tax calculation methods have also evolved. For imported goods, the tax base now consolidates the dutiable value, import duties, any additional import taxes, excise tax, and environmental protection tax as applicable. This framework demands accuracy in customs documentation and financial reporting. For promotional goods and services that meet the criteria set in commercial law, the taxable value is set at 0, providing relief for businesses executing compliant promotional programs. Tax rates have been adjusted. Some products will move from being exempted to a 5% rate, such as fertilizers and offshore fishing vessels, while others currently taxed at 5%, like unprocessed forestry products, sugar, scientific teaching equipment, and cultural performances, will shift to a 10% rate. Simultaneously, international transportation and certain duty-free goods will now be taxed at 0%, offering advantages for exporters and sectors involved in cross-border commerce. Procedural requirements for tax deduction have strengthened, with mandates for non-cash payment evidence for all purchases over 20 million VND, barring certain government exceptions. Additional documentation, like packing lists, shipping notes, and insurance for exported goods, will be required. These changes intensify the need for robust financial record-keeping and transaction transparency. Electronic invoicing is another area seeing augmented regulation. From June 1, 2025, sellers issuing invoices to business customers must accurately include tax identification numbers or national ID numbers, except in specific cases involving direct-to-consumer sales. Failing to comply may result in administrative penalties for improper invoice issuance. Finally, surplus personal income tax following annual reconciliation can, under certain conditions, be credited toward future obligations, matching in economic content and local tax jurisdiction, lessening the administrative burden on overpayers. Staying informed of these policy updates helps entities proactively adapt their internal controls, safeguard compliance, and optimize tax positions in a changing environment. We recommend seeking professional advice in complex or cross-border scenarios to ensure a thorough understanding and proper implementation of every requirement. Thanks, and have a nice day.